Hello again, everybody, and it's John D Healy here. My podcast is called It's Good to Talk, and it surely is good to talk. This is a book I wrote for my friend Tony McKern. It's his life story from 1941 up until recently. My sponsors are Liffey Moving Company here in New York City, and they've been around forever and ever and ever, longer than Jeopardy. I always have interesting guests on. Today is no exception. My guest today is Christopher Roselli, and we're going to be talking about insurance and the matters of such like that. So, Chris, nice to have you on here.
Thank you for having me, John.
Okay, tell us a little bit about your background first. I usually ask people how they got into the business, where you were born, who influenced you.
Well, my story's a little unusual. I was born in Brooklyn, New York. My parents moved me out to New Jersey when I was 11. So for the better part of my older adolescence, I was in Marlborough, New Jersey, and went to St. John's University. I had aspirations of becoming a trial attorney, and my real goal was to honestly be a criminal trial attorney. And unfortunately, as I was entering law school, I was involved in a car accident where a Mack truck had hit my vehicle. And due to the subsequent injuries and the surgery, I was forced to delay law school. And by the time I was ready to go back, I needed a job. So after I was clerking for a Supreme Court justice in Staten Island, I entered a law firm in Manhattan, and I was doing personal injury law. And I quickly moved up the ranks to the point where I was actually becoming the director of the firm. After I had made my bones in trial and discovery and all of the classes of litigation, I soon discovered that I was never going to make it back to law school. So I just continued my career in law. I was hired I left the personal injury and I went into insurance defense. And while I was I was a director of an insurance defense law firm. I was asked, because of my management skills, to run a real estate conglomerate. They own, about 800 million in commercial real estate, and I was asked to manage that while I was managing the law firm. So I became a real estate broker, and concurrently I was doing the law firm, I was doing the real estate, managing, leasing, selling, and I realized one of the biggest assets that I had was basically, corporate management. And when I started learning the finance aspect of it, alongside the leasing and whatnot, I realized that my clients' largest expense was the insurance. And I'm going back to 2006 now. So what I decided was, hey, look, if I could save my clients money on the management side, why can't I save my clients money on the insurance side? So that's how I started Roselli Brokerage Group, and the rest is history for the last, 11 and a half years.
Well, that's excellent because I actually attended St. John's University myself. My thing was marketing, international marketing, and then I veered away into, well, just like yourself, I had to get a job, and if I can say anything, I didn't want to be a lawyer because I think we have enough lawyers in the world at the moment.
Very true. Very true.
Very true. My guest, Christopher Roselli, the podcast is good to talk. It's also good to listen. And speaking of real estate, I did have a real estate guy on here a couple of times, Michael Moran. He's from New York City here. He's probably one of the top real estate brokers in New York City. And my guest can tune into him as well. But getting back to you, Christopher, let's get into the nuts and bolts of the world of insurance. Let's talk about insurance in general first.
Okay.
People say words like an umbrella policy. Let's explain that for my listeners.
So what an umbrella policy, and honestly, it's probably one of the most direct names you can give something. An umbrella liability policy is basically a policy that covers all of the underlying general liability policies. So for instance, if you have a business, or if you're a person and you're covering your house and your cars, the liability limits for those policies are limited, just like a commercial general liability policy. The limits of liability go to a certain degree. Okay, most insurance companies won't pass that degree. Well, most insurance companies or most people have high risk tolerance Okay, excuse me, or low risk tolerance, but high risk, which means they may own a business, they may own a home or multiple homes, where the general liability might not cover them. So what do? They take out additional liability to umbrella the other policies. So God forbid there
Okay.
is a claim, and those smaller liability policies are exhausted because of the claim. The umbrella policy will then kick in and cover them with additional liability coverage.
Okay. Well, that's interesting. I did a podcast a few months back too here about I had my own restaurant in Ireland, Mother Hubbard's. It was quite a success. And when I put it up for sale on the market, I never had a claim until about 5 months before I sold it, which was kind of ironic because how come nobody had a slip and fall for the first 6 years, and all of a sudden, in the last 3 months, I had two people that slipped and fell,
Right.
despite cleaning routines and cleaning sheets, and it was kind of a bit of a battle with the insurance company too, because they were trying to push the blame away,
Of
and
course.
then that makes me ask the question, of course, yeah, like, can you explain a bit of that for my listeners as well? And I have another listener who was on Michael Moran's podcast, Christine Kinney. She wanted me to ask you a question about over insuring, say, a three-family house or under insuring it. Is it based on market value? Like, how do you value the rate of insurance for
Okay,
someone like
so
Christine?
very very important to understand, and your question is one that a lot of people ask me. Um, why do I need so much insurance on my home, or why do I need so much insurance on my business dwelling or my business property? I can't sell this house for that much, so why do I need it? I can tell you right now that the market value of your house or the market value of the building that your business is operating in has absolutely nothing to do with the market value, with
Okay.
the coverages that you need. Okay, you can, and New York is an underlying example because real estate prices are so inflated in New York. Okay, they will never match the underlying rebuilding costs for properties. It'll just never catch up. Even in an inflated market like we have now, inflation on building materials, oil, labor, okay, it will still never match the market value. Okay, so what we attempt to tell people when you're getting the coverage requirements for a home or a business building is how much does it take to put that building back to its original condition. Okay,
Okay.
that's what defines rebuilding or dwelling coverage. Okay, so I
Okay.
can tell you for an example, in the city of New York, we go by an estimate on regular dwellings where you may live at $299 a square foot. In an
Okay.
inflated market, that's what we're seeing now. So God forbid you have that three-family home, that is a total
Right.
loss. Okay, we take basically
Okay.
the square footage of that entire building, we multiply it by $299, and that's what
Okay.
your dwelling coverage should be in the city of New York. Okay, now as you
Okay.
leave the city, Brooklyn, Staten Island, Queens, Bronx, that price per square foot actually goes down. As you know, Manhattan is a very
No.
expensive place to
Okay.
build.
Right.
Okay, so we can go to the outskirts of Staten Island and we can get that dwelling per square foot coverage down to almost 125 to $130 a square
Wow,
foot.
that's a big difference.
Yes, a huge
That's a
difference.
huge difference.
So it has
Yeah.
nothing to do with market value. And one of the examples I give are people that actually buy co-ops. Okay,
Mhm.
you can buy a co-op, okay, in Manhattan for $2 million. It'll be 1,000 square feet. Okay.
Correct.
Now, if we're told, oh, we require $2 million worth of coverage, I'll tell you, you're going to be significantly overinsured. Okay. There's no
Okay.
way 1,000 square foot co-op in the city of New York will ever have a
Okay.
rebuilding cost of $2 million. Okay. We
Okay.
use the
Interesting.
formula 1,000 square feet times $299 a square foot. You're going to have
Right.
$299,000. Okay. That's the
Okay.
appropriate coverage. Now, here's where
Okay.
things get
That's
a little
interesting.
dicey. Okay.
Okay.
Mortgage companies do not like insurance companies. Insurance companies don't like mortgage companies. Why?
Okay.
Because a mortgage company will always, almost always, excuse me, require that a dwelling be covered for at least the mortgage amount, which in Manhattan, okay, that's going to be
Mhm.
significantly inflated because that same co-op, okay, at 1,000
Mhm.
square feet that you're buying at $2 million, you may have a $1.5 million mortgage on that property. And the mortgage
Right.
company may call us and say, no, I require $1.5 million worth of coverage, which would be a significant jump than what the rate should be. And that's where the
Well,
two always conflict.
My next question is, like, say, when I had Michael Moran on, the real estate guy, and we talked about co-ops and condos, and my own experience with co-ops is, well, number one, they're difficult in terms of dealing with a co-op board.
Yes.
A lot of rules and regulations. But let's go back to Christine again. Let's say that she's buying that home, let's say for the 2 million, right?
Mm-hmm.
And let's say she already has $1 million of her own money, so she's only looking for a mortgage of half. Does now you're the insurance guy, does the broker guy come along and say, sorry, Christine, or sorry, Chris, we still want it insured for 2 million?
Yes. Like I said, most of the time the broker won't say it, but the mortgage company will say it. Sometimes the mortgage company will tell us, we want 20%, we want at least 20% of the assessed value. Well, guess what? If something is assessed, if something is appraised for $2.5 million, okay, and that same co-op, okay, so you need $400,000 worth of coverage, okay, that same co-op which only should be covered for $299,000, they won't qualify for their mortgage. So I literally have to go out there and find a carrier that is willing to accept the additional coverage based on the mortgage company requirements. It becomes very difficult.
All right, so that's your role. You are the broker, so you're going to look around for Christine and get her the best possible deal.
That's
keep
right.
her happy and her husband
I'm able
happy.
to take that application and shop it to 15 or 20 different insurance companies,
Okay.
all of which have different underwriting procedures, different underwriting requirements, and find the best fit for her.
Okay. All right, and now let's get back to Christine again. Let's hypothetical question here. Let's say that the kids knock over a candle and they all go out to dinner and they come home, the house is burnt down, okay?
Mm-hmm.
And now she has a claim. So it's obviously an accident, number one. Now she has a claim. The claim procedure, should she hire like an independent assessor, or do you fall into that role too?
Okay, so the agent or the broker becomes a vital part of making the connection between the client and the insurance company initially, okay? A lot of times clients don't understand the claims process, just like you stated, and they'll call me and say, okay, do I put the claim in with you? No, you don't put the claim in with me. I can take your claim information. I can actually even contact the carrier to commence the claim process and advise them that I'm putting them on notice. But in terms of putting in the actual claim, the insurance company will 100% of the time want to talk to the insured over the broker. Okay. So really, I can start the process.
Chris,
but
why should Christine? Why does the carrier want to go directly now to Christine and bypass you? If I'm saying that correctly.
First party statements. Okay. Remember, most of the time, an insured is going to tell me a story. Okay, and they're going to tell me how the claim happened and their assessment. The insurance company is going to want to hear that from the first party. Take a statement from the first party, not a third party like me. They'll want it directly from the insured because they were on site. They can give the best assessment as to what happened right then and there.
Okay.
So after the claim is submitted, for claims over $50,000 to $100,000, okay, I would suggest going to an independent adjuster. They will know the nuts and bolts, okay, of every item, well beyond what you and I could ever assess in a claim. Okay. You and I will care about our personal belongings. You and I will care about our building, okay?
Yeah.
An independent adjuster will come in and they will literally worry about things as little as the outlet covers on the home. Okay, so even though you and I can estimate how much it's going to take to rebuild a house, we can estimate how much our clothes are, our furniture, our computers, our TVs, our computers, things like that. We can make those assignments. The independent adjuster is going to know all the little minute details of what to add into that claim.
So, let's talk about Christine is in my ear again, literally and physically. I won't crack a joke here, but she wants to know what's it going to cost if she has to go and get the adjuster. How does he get paid?
Okay, the adjuster gets paid by you, but from the insurance company directly. You're going to sign a contract with the independent adjuster. Okay.
Okay.
Those contract terms can be anywhere between 5 to 15%. I've seen them as high as 20% in a high claim market.
Okay.
Like we just had, we had a lot of claims with Ida, the storm that just came
Right.
through. Okay.
Right.
A lot of independent adjusters were completely inundated with work that, supply and
Okay.
demand. Basically, their prices go up because of the amount of claims that they have. So you're going to sign that contract that's going to save between 5 and 20% of the entire claim amount. That includes dwelling and personal property. Okay? So if your dwelling has to be replaced at $1 million and your personal property has to be replaced at $200,000, you have a $1.2 million claim, he's going to get a percentage of that claim. Now, that check sometimes comes directly to you and you have to pay him, or that check will sometimes come directly from the insurance company in his name directly to him.
Okay. All right. Well, I think, and Christine will probably agree with me, I mean, I hate paperwork. I hate all that paperwork because I just hate paperwork in general.
Right.
So it's worth it to me to have the insurance adjuster guy or lady to do all that work and let them have their percentage and send me the check for the claim. Okay, that's another question Christine will have. How long does it take to process a claim?
Okay. Every state is different. State insurance regulations state that most insurance companies, for an auto accident, will have 30 days to adjust a claim. Some states will have a little bit longer or a little bit shorter. Homeowners is usually 30 to 60 days, 90 days to pay. Okay? More complex claims where there could be a potential for SIU investigation. SIU is Special Investigations Unit, which is what every insurance company has. If they suspect that there is fraud, the claim will immediately be forwarded to the SIU department, for a more detailed investigation into the claim. Okay, if something is just not adding up, let's say that candle was not found, there was no melting wax near where they said the fire started. SIU will be called in to assess the damages and to assess the liability and to see if there actually is fraud being done.
Right, that's interesting. Well, back to my restaurant situation where this lady took a slip and fell. I never saw the lady, by the way, and I never saw her slip and fall. Her husband wasn't much of a witness to it either. But what if it was, say, a case that she just did a George Santos on me and said she slipped and fell, put in the claim? And what if this lady is slipping and falling all over the 32 counties of Ireland?
Okay.
Is there a way to investigate her?
There is very interesting case law, and this is where my legal background comes into play, and this has happened. Okay. Let's say your first notice of the claim is her attorney sending you a letter. You're going to forward that letter to your insurance company to commence the claim. That insurance company is going to take a statement from her. If the insurance company is not able to get a statement from her because her attorney refuses that, the attorney essentially is going to have to start a lawsuit against you. Okay? Part of your insurance policy. What's up?
When you say there that they would start an investigation, then would that be against me as the owner of the restaurant or against the lady that slipped and fell?
It will start against the lady, but they will use your statements as to what you heard happen or what you know to be true, okay? And they will use that to conflict what her statement is. Now, if in fact you don't see it, it never happens. Majority of the slip and fall claims that happen, there is no documentation of it. It's really your word versus theirs. Hopefully, maybe you have cameras that will help you in your establishment. But for a lot of times, that's not the case. And that's when insurance companies have a real problem settling outside of court, is because if they don't have the appropriate information to be able to adjust the claim, they're going to want to get what's called a deposition from her. So litigation then becomes a very powerful tool, because in a deposition, an attorney can get inconsistencies of the plaintiff's testimony out of them to throw up more red flags that may say, wait a minute, something's not adding up here. She's saying on Tuesday she fell, on Friday she went to the hospital, on Saturday she had a broken leg. Well, you waited 5 days before you could go to the doctor. Yeah, things don't.
On Sunday she's playing golf.
Right, exactly. And then more investigation starts. Is the claim large enough for an insurance company to invest the money into independent investigators to follow her? A lot of times you get a construction worker okay, that says he hasn't been able to work for 6 months, okay, but from day one that he put the claim in, okay, the insurance company's been following around. Come to find out,
Hmm.
he's hauling bags of concrete on his shoulders. Well, if you're not
Or he's paying off.
working,
Yeah,
how are you able to
yeah,
do that? Okay, so
right.
yes, there are some times when an insurance company recognizes very
Hmm.
early on that the injuries sustained or claimed,
Hmm.
okay,
Right,
are much more significant than the amount of money it would take for them to invest in the investigation,
right.
and it's worth paying somebody
Okay,
to follow the guy around.
right, okay. To see if he's on the dance floor. All
Right.
right, dancing and not on his ass. Okay, let's get back to another aspect. My guest today is Christopher Roselli, a broker, insurance broker here in New Jersey, but covering you cover the all of New York as well,
Yeah, New York, New Jersey, Pennsylvania, Connecticut, Alabama, Texas,
right?
Florida.
Okay, excellent. And let people know right away how they can connect you. Website, phone number.
Yes, we have multiple ways. We have a telephone number is 347-766-0322. We have a website that you can contact us direct. It is completely encrypted, so you can actually even put in your policy information into that, and it'll immediately send that information for us, fill out the application
Good.
for you, and we can get that immediately submitted to the insurance company. We also have multiple ways within our client portal where if you
Right,
already have an account with us, okay, or I commence one, I can give you a
right.
client aspect portal where you can log in, see all of your policy information, submit additional applications, make
That's
policy
good.
changes if you'd like. So, there's
That's
multiple
good.
ways of getting in touch with us.
Okay, and another interesting question. You don't do life insurance, I assume, no?
I do life insurance, yes.
Oh, you do life insurance.
Yes, I
Okay.
do.
All right. I wasn't aware of that. I'm glad I asked that question now because that's important. So, are there situations where somebody, let's focus on the life insurance for a moment, where somebody is turned down for a life policy?
Hmm.
Like, for example, I believe Neil Armstrong, before he walked on the moon, he was refused life insurance or
Yes,
life insurance
yes,
because he was considered a high risk going
correct.
on a rocket to the moon, and he could fall off the moon, and he's a certain claim at that point, or his wife, or his estate.
Right.
Okay, but I assume he got back from the moon, so he didn't need the policy anyway. So he saved on the premium. Are there situations where people are refused, like let's say health issues, for example,
All the time. All the time.
all the time, really?
It has become the insurance world in general, but life insurance specifically, has become very claim oriented because insurance fraud is a huge, huge aspect of why everyone pays high premiums. Life
Right,
insurance, especially whole life insurance, that's where the premium remains consistent for the rest of your life rather than term, where the insurance
right,
runs out after a certain period of time. Whole life insurance, the underwriting procedure is quite detailed, especially that now they're taking blood tests, they take physicals to make sure that you are at least pursuant to your application in good health.
right,
Now, if you disclose
right.
that you're on medications or you disclose that you have a pre-existing medical condition, that doesn't necessarily
Mm,
mean you're going to be denied, okay?
right,
But it does mean that your premium is going to be higher than a person of good health. In fact,
right. Okay, fair enough.
yeah, the first four questions I ask anybody is, how's your health? Do you see your doctor regularly? Are you on any medications? And have you ever been diagnosed with cancer? Okay.
Okay,
Cancer is the number one underlying reason why most people are denied life insurance coverage.
mm,
Okay. Any history for a person. Sometimes they go into family history, but it's not used as often as your personal
right,
history. So if you are
right.
recovering or
Okay.
you are in remission of cancer, it'll be very difficult for you to obtain life
Okay.
insurance.
Okay, and I suppose tied to that, then I did have Lillian Kinshore on here. She was dealing with wills, trusts, and estates, and we had a very informative interview as well, and that tied into situations of, I guess, life support in end of life, where people have that terminal illness or an illness.
Right.
So if there's say a life policy tied to a health medical hospital policy. So let's say someone starts off at the age of, let's say 40 years old. They're
Hmm.
in good health and everything is looking pretty good at that stage. of life begins at 40. So for some, but and it ends for more. But let's say they're paying every year. They pay the premiums, and they're paying a high premium. They don't smoke. They don't drink. Life is boring, and they get up. Now they reach the age of, let's say, 75 years old, and now they need to be maybe moved to nursing care or something like that. How does that pan out in the end?
Okay, so if you
my question is, if they get in at the age of 40,
right, so you have basically what you're saying is you have a whole life policy because
right,
you've obviously
a
said
whole
you're
life,
35
yeah,
years. You have a whole life policy.
right,
So long as you continue to pay your premium, okay,
right,
that will cover you for multiple types of death. That premium will also have cash value behind it. Okay,
right,
because after 12 years, a whole life policy starts to accumulate cash value where you can
right.
conceivably borrow against that cash value to pay for your medical bills.
Okay,
Okay,
that's
there
good.
are riders also to life insurance policies that will allow you to actually take a portion of your premium and put it to terminal medical care, terminal end of
Okay,
life care,
okay,
hospice, things like that.
right.
Okay,
That's
not
important.
not every life insurance policy is created equal. Sometimes people
Okay,
do want those special aspects of their policy
right,
to be covered.
right,
Okay,
right,
sometimes if you just get a straight whole life policy, other than its cash value and other than its death benefit, okay, there's really nothing else that policy will do for you. Okay, there are other life policies where you can get a whole life policy, covers the death benefit, covers the cash value, covers terminal care, covers terminal end of life decency,
right,
okay, for hospice care and things like that. So different
right.
things that you tell your broker that you want your insurance policy to cover, he has to add that, which increases premium.
Okay, right. My guest today is Christopher Roselli. My podcast is called "It's Good to Talk." It's also good to listen. Remember. So for my younger audience and listeners, would you advise, say, someone, if they're contemplating buying a life policy, that the younger they start, the better chance, number one, they have of getting the policy, number two, the cheaper it will be, and the long-term benefit is more beneficial for them?
Absolutely. I know people
Okay.
that pull life insurance policies on their children that are 10 years old. Okay.
Wow.
Yes, whole life policies. Now, is it factored in that for the next life expectancy, I believe we're up to 77 for men, it's almost
Okay.
79 for women now. Is
Okay.
the premium going to be really, really cheap? I think it'll be cheaper than somebody who's 30, 40, or 50 years old. Absolutely. But insurance companies are
Okay.
getting smart now because people are getting smarter. So they're understanding now,
Okay.
okay, if I'm writing that kid at 10 years old, okay, I'm going
Right.
to have this policy probably for the next 60 or 70 years plus,
Right.
okay? The premiums are going to be much, much better. You are going to be rated on a good health policy. Okay, the cash value is going to be more readily available by the time they're 21. That cash value is going to be available to them, so they can borrow against it. But they also understand, insurance companies also understand that they're going to be collecting that premium forever. Okay,
Right.
and what an insurance company does is, a lot of people think that the insurance company takes that premium, they put it into a bank account for you, okay, and when you die, then it's available, and plus whatever they've done. No, that insurance company is investing that money from the second you
Okay.
start paying that premium. And they know
Okay.
exactly what their rate of investment is on that, which is how they're
Right.
able to rate you. So if they say
Okay.
over the course of the next 70 years, we're going to be able to take that premium, okay, and make $30 million on $1 million death benefit payout,
Okay.
okay, they realize that they've made 30 times their money based on the 70
Okay.
years that you've been paying into that premium. So we're seeing now that the premiums for the younger ones, although they're still very, very cheap, okay, they are catching
Right.
up to the rest of the market where they're saying, okay,
Right.
well, that $1 million premium where you and I might be paying $1,000 or $1,500 a month, okay, for that premium, that 11-year-old is probably going to be between $100 and $125 a month, okay,
Okay.
because of the greater amount of time that they're going to have it.
Right. Okay. My next question is like devil's advocate again. So let's say I have a 10-year-old son, right?
Hmm.
And I take out a life plan on him that covers everything you said, all the good stuff there,
Hmm.
right? Well, now he's only 10. But let's say by the age of 16, he's like an alcoholic. He's smoking 40 cigarettes a day, and he has bad lifestyle, okay, like his risk, I may end up living longer than he will, probably, most likely, because I have a clean style of living sometimes. So how does the insurance company deal with that situation?
Okay. Once you lock in, for the most part, the simple answer to that question is once you lock in a premium based on the underwriting procedures at the time that you were approved for that policy,
Right.
what you do with your life thereafter, okay, that's your business. That premium does not
Okay.
change. Okay. Now, are there
Okay, the
certain
premium does not change.
underlying provisions that could affect the payout? Yes.
Right.
Okay. If you
Okay.
fill out that application, and obviously at that young age, okay, and you are approved for that premium for the rest of your life, and then all of a sudden you
Right.
become an astronaut, okay, and you're
Right.
going up to space 30 times in your
Right.
lifetime, that
Right.
is going to affect your policy payout. Okay. Your
Right.
policy will have exclusion clauses in it for things that it will not cover. Okay. Um, a lot of
For
them are the
example,
high risk
let, let,
forms of
let's go back
employment.
to my let's go back to my drug and alcoholic hypothetical son. I don't have
Right.
one, hopefully not. But let's say now the fucker commits suicide. Will they pay out?
Most life insurance premium policies cover suicide if done within a certain period of time after the suicide clause. Okay, this prevents people from
Right.
taking out insurance policies and then 3 days later, after the policy is in effect, killing themselves. Okay,
Right.
there's
Okay.
usually a wait period. Okay, it could be 30, 60, 90 days, could be a year. You have to look at your policy
Okay.
specifically to see what the suicide clause says.
Right. Okay. Let's say hypothetical again that I have a wife. I don't have a wife, but let's say I did have a wife, and I only had her for 30 days, marry her and whatever for a month, and now I load her up. Okay,
Hmm.
and she disappears or falls in the river or something. Will the insurance pay on her?
If there is a foul play um, suspected, okay, an insurance policy will not pay out.
Okay.
Insurance, and I'll take you to the legal side again. An intentional tort, okay,
Right.
is an occurrence against another person, okay, and that goes
Okay.
across all insurance. If you deliberately
Right.
ran into me with your car because you didn't like me, okay, your insurance company
Okay.
will deny me paying my injuries because you deliberately
Right.
did that. An
Right.
intentional tort. Okay, a tort is a
Okay.
malfeasance
Okay.
against somebody, but an intentional
Right.
malfeasance against somebody, okay, is
Right.
strictly denied by any insurance
Hmm.
policy because they can never
Okay.
control what you do intentionally. Insurance companies go by
Okay.
actuaries. Actuaries take into
Okay.
probability clauses. That's how premiums are
Okay.
decided. Okay, so if somebody does something intentionally, there's no way of calculating that intention. Therefore, no insurance company will ever pay an intentional tort, ever.
Okay, the podcast is called It's Good to Talk. My guest today is Christopher Roselli. We're having a good conversation about life insurance and all types of insurance. There was another case in Ireland years ago, many, many years ago. It was an extremely interesting case. And it was a case of a kidnapping, for want of a better word. A famous racehorse called Shergar,
Hmm.
probably one of the most famous Irish horses at that time, anyways, worth a lot of money. And the horse was kidnapped, if that's the right word. Anyways, the horse was stolen in the middle of the night from the owner's stables, I guess, and the horse disappeared. So the horse was never found. And I think it was Lloyd's Insurance of London. They refused to pay the family the insurance on the horse based on the fact that the horse was never found.
Okay, so
Are you familiar with something like that, or?
yes, actually, we see this a lot in what's called the PAF policy, personal articles floater. Okay.
Right.
In this specific matter, the Lloyd's of London would be the best insurance company for that type of insurance. Okay.
Okay.
Especially, actors, actresses, hand models, things like that. People go to Lloyd's to insure those things. Okay.
Okay.
If the policy specifically does not state, and this is a real word, mysterious
Okay.
disappearance. Okay.
Okay.
If the policy does not have that clause in there, then if something goes
Okay.
missing, stolen,
Mm.
horsnapped, kidnapped, lost, broken, fall in the ocean, fall out of a plane, if that clause for mysterious disappearance is not in that policy, okay, then the insurance company has a right to deny the claim.
Scherger obviously was never found. And, I mean, maybe he has some sons or daughters running around the racetrack somewhere.
Or his head might have
if
ended
they
up
are,
in somebody's bed.
His head might have ended up. Well, I think his semen would be more valuable than his head in any case. But there could be a bit of longevity in the family.
Right.
But there'd be fat runners. But it's good to talk, and that's why my podcast is called Good to Talk, because we can also have a joke too. So, Christopher, remind us once more again your phone number and your contact information.
So it's Christopher Roselli from Roselli Brokerage Group. The direct line is 347-766-0322. You can go to the web, and it's www.rosellibrokerage.com.
Right. And you explain that if someone is hooked out into it, they have a portal and they can check their policies, add to their policies.
We have all of that.
And all that. And you're available. You're very generous with your time today. Thank you for your advice.
Thank you for having me, John.
And good information and good knowledge. And I'm glad you're a former student of St. John's like myself. I was there during the Chris Mullen period. And that was another thing. When Chris Mullen was selected to go and represent the United States of America in the Olympics, I don't know if you were there at that time, but the fees at St. John's almost doubled.
Yes.
It's like I had to pay for St. So it's like I had to pay for Chris Mullins to go
for his
to
world
the
tour.
Olympics. The world tour, yeah. All right, Christopher, I don't think we have much more to talk about today. Great to have you on the show, and I'm going to say goodbye to you.
John, it was a pleasure being here. Thank you again, and I hope to see you soon, pal.